Good afternoon, everyone, and thanks very much for your attendance today. We also have some cautionary statements because I'll be looking forward in the near future and over 22 years. Arizona Sonoran currently owns the Cactus Copper Project, located just west of the city of Casa Grande in Arizona, and it's about 45 miles just to the east or southeast of Phoenix itself. If you were to visit our site, we'd be able to pick you up at the airport in Phoenix and have you at the mine site in less than an hour. And that ride would mostly be on a highway going to the mine site. We focus very much on the asset itself. We've grown the asset to a 22-year project mine life. We focused on simplicity. It's a conventional mining operation with standard heap leaching processes. We're in a Tier 1 jurisdiction in Arizona where geopolitical risk is rearing its ugly head again. We feel strongly about the fact that we're in a safe jurisdiction with excellent, strong license, both from the local communities and the local officials, the state officials, and the federal officials. And we are not subject to NEPA because our asset is entirely on private land, and we are subject to a very well-defined state-led permitting process. Our management has a long track record of project execution. And late last year, we were very pleased to present some compelling economics at $4.25 copper. Our NPV was around $2.3 billion. We were just shy of 23% on the IRR. And I'll discuss the economics in a little bit more detail shortly. We're getting very close to a near-term project decision. We are on a path now to completing our permitting, which we expect that process to wrap up in the second half of this year. We'll be completing a DFS around that same period of time, and we're on a very good path to getting the project funded. A little bit about the company itself. Our market cap is a little higher than what we have here. It's currently Canadian $1.2 billion, or $865 million. We just have a little over 208 million shares outstanding. We have excellent support with key partners, Hudbay, that owns 9.99% of the company, and Newton Rio Tinto, which owns 5% of the organization. We have 10 analysts covering the company. We have strong institutional support, and I'm really pleased to share this fact with you. Had you bought a share of Arizona Sonoran on January 1st of 2025, you'd be up 292% today. In terms of the project itself, it's an old brownfield site. It was operated by ASCU back in the mid to late 80s. We've resurrected the asset itself. We currently have a water right secured to the year 2070. We have a power line right at site, and we're looking to access clean energy from a nuclear facility called Palo Verde in Phoenix, and we currently have a 69 kV line at site. There's a railroad that goes right onto the site. We have a spur that extends immediately right into the site, and we can use that going forward. And adjacent is an industrial area which has access to labor, industrial zoning, manufacturing, and private land. We have spent a lot of time on our social support and our strong license to operate. We have 87% support from the local community, primarily because this was an old mining district. A lot of folks had worked at the mine back in the 80s and 90s and have fond memories of working at the site itself. And so we're going into our permitting process with tremendous support from the community. A little bit about the economics and how we got here. One of the things that we focus in on as a management team is how are we deploying shareholders' money? And one of the things that we looked at very closely when we were growing the asset was when people are giving us their money, how are we measuring that? And what we were finding was that our discovery cost per pound of copper was 0.4 cents a pound on the back of a metal that's sitting just shy of $6 today. And so consequently, as a management team, we continued to deploy those funds, and our view was until we started to see diminishing returns, we were going to use those funds because we felt that that was the strongest driver of value. And I'm proud to say today that we have yet to see diminishing returns. Our current resource stands at 11 billion pounds in the measured and indicated category, and another 1.7 billion pounds in the inferred category. And the result of that was a net present value of 2.3 billion, initial capex of just under $1 billion, life of mine cash flow of about $7.1 billion. It's a good asset with a good grade, and it's got an average annual production. The slide there shows 226 million over 10 years. In fact, it's about 226 million over the first 15 years of the asset. And we worked very hard to drive value towards the earlier years so that we can improve upon the economics. I'll spend a little time here. Indulge me for a second, folks. It's a CFO up here, so I love numbers on a screen. But I wanted to talk a little bit about the economics. You'll see in green, we've highlighted the base case economics that we ran last fall using 4.25 metal. Again, we've highlighted some of the numbers. But the one thing I wanted to focus in on, which isn't on the slide, is our net present value to capital was 2.4 times. And so generally what that means is we're creating 2.4 times the value for every dollar of shareholder money that we deploy against the asset. And I'll get to the punchline in a minute because it dovetails nicely with Joe's presentation. The highlight in blue is just simply to show what the economics look like today in a spot price environment. And you can see that the net present value shoots up to $4.7 billion, and this is on the back of an $865 million market cap. The net present value to capital ratio that I talked about is 4.8 times. Keep in mind that most companies target 1-to-1 ratio. And so we're at an industry-leading 4 times. But here's where we really compete. This asset even does well in a low copper price environment. And just to highlight it, even at 375 or so, we're still generating $1.6 billion of value and a good IRR and unlevered post-tax cash flows of about $5.6 billion over a year. So this is where we compete with our peers. This asset can do well in the spot price environment and a lower price environment. And here's the key point. The pundits are calling for copper to increase materially over the next few years. The reality is we don't really need that. If copper stays at spot pricing, we believe we'll do well. In terms of the CapEx, you can see that this slide actually demonstrates a few things. Again, we talked about the NPV, or the initial CapEx ratio, right at the very bottom. You'll see we're sitting at around 2.4 times here. And we believe this is an area that really differentiates ourselves from our peer group. And really the point here is to let you know that we really focus in on, when you give us your money, how do we use it, and how can we generate value. In terms of the CapEx and annual production, you can see that in terms of the pre-feasibility study, our NPV is around 2.3 billion. We'll be producing on average of about 113,000 short tons of cathode annually over a 22-year mine life. We firmly believe that the mine life will be in excess of the 22 years, and we're currently working on plans to realize value with an additional expedited plan. In terms of the benchmarking and with M&I copper equivalent resources in million tons, you can see that we hover at around a 0.48%, and our enterprise value is still sitting at 0.08. The point that we wanted to stress with this slide and other metrics is, you may ask the question, well, you're up 292%. Is there a little oomph left in the stock? And we believe there is, because the stock's still trading at a 0.45 to 0.5 times NAV. And we believe this is a critical year for us in terms of catalyst for growth, which we'll talk to in a second. We talked a little bit about our permitting process. That's been a very straightforward process for us. We've been working closely with the state officials with respect to the permitting. We just received our dust permit, and we're on track to receive the remaining key permits later this year. We have rights to 3,800 acre feet of water per year until 2070. The reality is we need about 70% of that, so we've secured the water rights. We talked about our social license to operate. We pay very close attention to our community. And we received 87% support from the community, which we would argue is probably one of the highest levels of support that any mining operation could receive from the local towns and communities in and around the site. Next steps for the asset itself, there are three real catalysts for us this year. One, our permitting. We expect that to be completed this year. Number two, the DFS. And the third is the financing, which is going very, very well for us. And we're still on track, and we've communicated to the market that we're looking to deliver first cathode production in the second half of 2029, and that is currently our goal and our intention. Talked a little bit about this previously, but again, as you can see, the value that we've created, this is where our share price was back in January of 2025. Of course, we were buoyed a little bit by the copper price, but we also made very distinct decisions in terms of where we could add value. And for example, we had bought back about 0.64% of an existing royalty that the company had the ability to buy back. And obviously, in hindsight, we made that decision using $4 metal. And obviously, in hindsight, we're pleased to report that we returned value back to the shareholders. I won't spend too much time on this. We just wanted to talk a little bit about where we're creating value. Joe talked about 20,000 to 21,000 tons capital intensity. So this is the capital over the average tonne produced. And this is where we sit, at 10,900. The main reason for that is because we already have infrastructure. We have power grid, we have rail, we're close to town, we don't need a mine camp, and we can avoid all those big expenditures that drive the valuation. And this is an area that again, we believe we differentiate ourselves from our peer group, and that we're developing quite a bit of value for every dollar that we're deploying. So just in conclusion, our asset, it's a large copper porphyry system. It still has upside there, and we're going to chase that upside in the coming years. We're in a tier 1 location. We've created value with respect to average annual production of at least 103,000 metric tons or 113,000 short tons over really the first 15 years of production. We talked about the grade. We believe we have a low-risk asset. It's a wonderful jurisdiction. We have support at all levels, and we'll be producing cathode in the US, and our goal is to have it consumed in the US as well. So we obviously have support both at all levels, at the federal level, at the state level, and the local level. Thanks very much, everyone. I appreciate your time.